you're losing thousands in hidden tax breaks. You're probably overpaying the IRS thousands of dollars every single year without even realizing it. I've analyzed over 500 tax returns in the last decade, and here's what I discovered. Most people miss these 10 tax breaks that could instantly put cash back in your pocket. Let's fix that right now. Listen, I get it. Tax season feels overwhelming. You file, you hope for the best, and you move on with your life. But what if I told you that buried in the tax code are legal loopholes that the wealthy use every single year, and you can too? By the end of this video, you'll know exactly which deductions you've been leaving on the table. Number 10, the state sales tax deduction. Did you buy a car, boat, or make a major renovation this year? Most people default to deducting state income tax, but if you live in a no-income tax state or made big purchases, deducting sales tax instead could save you hundreds, even thousands. Keep those receipts for big-ticket items. The IRS allows this, but almost nobody uses it. Number 9, home office deduction. If you work from home, even part-time, you can deduct a portion of your rent or mortgage, utilities, internet, and repairs. And no, you don't need an entire room. The IRS simplified this with a rate of $5 per square foot up to 300 square feet. That's a potential $1,500 deduction just for having a dedicated workspace. Business owners and freelancers, this one's for you. Number 8, student loan interest. You can deduct up to $2,500 in student loan interest even if you don't itemize. This applies whether you're paying off your own loans or your kids'. And here's the kicker. Your lender sends you a 1098-E form every year showing exactly what you paid in interest. Most people just file it away. Don't. Claim it. Number 7, non-cash charitable donations. Everyone knows you can deduct cash donations, but what about that bag of clothes you dropped off at Goodwill? Those count too. Use the IRS's fair market value guidelines, snap a photo of what you donated, get a receipt, and you could easily deduct $500 to $1,000 or more. Just make sure the charity is IRS qualified. Number 6, energy-efficient home improvements. Install solar panels, a heat pump, or energy-efficient windows? You could qualify for a tax credit, not a deduction, a credit worth up to 30% of the cost. That's real money back. The Inflation Reduction Act extended these credits through 2032, so if you're planning upgrades, now's the time. Number 5, health savings account contributions. If you have a high-deductible health plan, contributing to an HSA is one of the best tax moves you can make. Your contributions are tax-deductible, the money grows tax-free, and withdrawals for medical expenses are tax-free. It's triple tax-advantaged. For 2024, you can contribute up to $4,150 for individuals or $8,300 for families. Max this out if you can.
Number 4, the self-employment tax deduction. If you're self-employed, you're paying both the employer and employer portions of Social Security and Medicare taxes. But here's what most people miss. You can deduct half of that self-employment tax on your return. This is an above-the-line deduction, meaning you don't have to itemize to claim it. That's an extra 7.65% back in your pocket. Number 3, education credits. If you or your kids are in college, or even taking professional courses, you could qualify for the American Opportunity Tax Credit, worth up to $2,500 per student, or the Lifetime Learning Credit, worth up to $2,000. These are credits, not deductions, so they reduce your tax bill dollar for dollar. Even online certifications and trade schools can qualify. Check the eligibility requirements. Number 2, retirement contribution catch-up deductions. If you're 50 or older, you can contribute an extra $7,500 to your 401k and an extra $1,000 to your IRA. These catch-up contributions are fully tax deductible and can significantly lower your taxable income. Most people hit the standard limits and stop. Don't. If you qualify, max out those catch-ups. And the number 1 most overlooked tax break, medical expense deductions. If your out-of-pocket medical expenses exceed 7.5% of your adjusted gross income, you can deduct the excess. This includes insurance premiums, prescriptions, dental work, vision care, even mileage to medical appointments. Most people think it's too hard to qualify, so they don't even try. But if you or a family member had a major health event this year, run the numbers. You might be surprised. So let's recap real quick. State sales tax, home office, student loan interest, non-cash donations, energy credits, HSA contributions, self-employment tax, education credits, retirement catch-ups, and medical expenses. These aren't loopholes for the rich, they're your tax breaks. But here's the thing, tax season is coming and you need to act now. Gather your documents, talk to a tax professional, and claim what's legally yours. If this video just saved you hundreds or thousands of dollars, do me a favor, hit that like button and share this with someone who needs to see it. And here's your next step. Download our free tax break checklist in the description below. It has all 10 deductions, what you need to qualify, and how to claim them. Don't leave money on the table. Click the link, get the checklist, and let's make sure you keep more of what you earn this year. See you in the next one.